Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. Today we are going to take a look at a mining company. We have covered them in the past, but it is Vale. They are out of Brazil. It is April 13th, last stock pick of the day video for the week. So let's jump right in. First up, for those of you who maybe stay for the whole video, you've seen this slide before, but I just wanted to share this with everyone. If you are interested in kind of how I decide my investment criteria when I'm looking at a stock, whether it's in my position currently or whether it's one I'm looking to add, this is what I walk through. I want to understand the business first and foremost. That's why I set these presentations up the way I do. That's where we start. We start with looking at the business. I want to look at growing free cash flow over the last 5 years is what I look at, and I'd like to project it out growing into the future. I want a growing dividend over time. I want a dividend payout ratio of 75% or less. I know I've mentioned that before. This does not apply to REITs or BDCs or companies like that that are required to pay out more than 75% of their free cash flow. I look at the dividend yield theory. We always take a look at that in these videos, so check valuation based on dividend yield theory. If the current yield is above the 5-year average, it equals a buy. It's considered undervalued. Current yield below 5-year average, it's a hold. It's considered overvalued. Current yield equal to 5-year average would be fair value. At least for me. You make up your own investment criteria. Don't just copy mine. Make sure you are making your own decisions. I am not a professional, and I'm just an average guy on YouTube, right? Grew up in a double wide trailer, so I am not the smartest guy in the room. Make sure you are doing your own research and using your own. This is just suggestions on how I do things. Buy below current cost basis if it's a position within my portfolio. If it is not, I'm looking at something within 15% or less of its 52-week low. I look at ROIC, return on invested capital, and return on equity, ROE, equal or greater than the industry's average, whatever company that industry or whatever industry that company is in, or an average of 10% or more. And for financial companies, I throw in one extra. I look at price to book. I want a price to book around 1 or lower, right? Usually 1 means it's fairly valued. Anything below that means it's undervalued. And a note here at the bottom, when I'm looking at a company, it must meet at least 4 of the 7 criteria. If it is not a financial, it must meet 5 of 8 if it is. So that is kind of what I walk through when I'm looking at stocks. Again, you come up with your own criteria, but let's jump right in and look at Vale. You can check them out at their homepage, vale.com. What are they? They're a mining company, right? We were founded on June 1st, 1942 as Compañía Vale do Rio Doce. I may be butchering that. I do not speak a lot of Spanish. Over the years, we became just Vale and built a history. We pioneered the world as a global mining company. We are present in more than 20 countries, sharing a passion for our business. We face challenges and we continue to learn every day. We have advanced ever since the first ore extracted in Itabira, Minas Gerais. Since then, we started to work in logistics through our railroads, ports, and terminals, and energy and steel making, right? So they have their hand in mining, but also in other sectors as well. And now off to the reason we are looking at them. They were down 1.2% on the day, and we are talking about Vale SA, ticker VALE. Closed out the day at $16.05, again down 1.2%. 52-week range as low as $11.72, as high as $19.70. I was buying them back in the $12 range, so I would love them to drop back into that range. You'll see my cost basis here in a minute. They are in my position. I am long Vale. Average volume of 22.6 million. Today was 17 million, and you can clearly see a big sell-off in the morning, then kind of flatline throughout the day. Market cap of 71.421 billion. A beta of 0.81, so they are less volatile than the overall market. Price to earnings PE ratio is $4.44, so that is nice to see. That's very low. EPS, earnings per share, is $3.61. That's pretty high for a company like this. Next earnings date is not listed. For dividend yield, this one is going to be, I'll show you in a minute, a little hard to judge because this bounces based on what nickel and other materials that they mine, or iron ore is a big one for them. What material costs are, right? So they are really driven by the cost of the underlying product that they mine. Ex-dividend date, the last one was March 14th, 2023. They usually pay out once to twice a year. So they are usually twice a year is what they've been paying me out anyway. And according to Yahoo Finance, where I pulled this information, I'm not affiliated, just one of the sites. They have a 1-year target estimate for the stock price of $19.02. So that would speak to some potential upside appreciation. And again, I always talk about the things I like to look at when I'm going in there. So get into the statistics, check them out. You can find price to book. You can find the PEG ratios. You can find a lot of information in there. One I like to look at, again, is the dividend yield theory, right? It's one of my criteria, so I'm going to look at it. They do not have a 5-year average listed, and they say their forward annual dividend is 4.27%. So nice dividend yield currently, but again, very inconsistent payout. You'll see that here in a little bit, and it's always based on what the underlying mining sector and all the metals that they mine are priced at currently. Another one I like to get in, look at financials, a lot of information there, debt they have, assets over debt. You want to look at all that. Are they paying off debt? Are they accumulating more debt? Are they free cash flow? That's what I like to look at. Repurchase of stocks, operating cash flow. You can find all that under financials, the balance sheet, the income statement. It's all underneath there. There'll be 3 tabs down there. Free cash flow is one I look at as well. So if you see here, 2019, 8.4 billion, 2020 growing there, 9.8 billion, really jumped up in 2021, but a big drop off from 21 to 22. So I'm not sure exactly what's going on here and not sure what we'll see in 2023, but that is a bit concerning. Big drop off. A lot of that might be due to prices, right? Have the prices of metals dropped significantly. That might be a big one to watch on this one because it will impact their payout. And this is all according to Yahoo Finance. I am not affiliated, just one of the sites I like to go to. And I always recommend more than one site. So another site that I like to look at is stockanalysis.com. That way you can check the sites and make sure the information you are getting is accurate and that they line up together, right? Some sites might not update while others do. So just make sure that you are using more than one source for your information and ensuring that you are getting accurate information. According to the 27 stock analysts on stockanalysis.com, they call it a consensus buy. They have a low estimate of $15.63, which would be a 2.68% decrease in the current stock price. Right, not too far off their low. Average estimate of $20.20, that would be a 25.78% increase in the stock price. And if it happened to hit their high of $24.84, that would be a 54.67% increase in the stock price. Now, another one that I like to look at, same thing, you can get into statistics, look at the financials. Dividends give you a lot of information as well. The next slide, where I pulled their dividends, that's where it comes from. Statistics is one I like to get in, and I like to look at return on equity and return on invested capital. I'm more focused on return on invested capital, but I also look at return on equity, and I want 10% or more or equal or greater than their industry average. So this would meet the above 10% threshold. 37.1% return on invested capital, very high, and return on equity 63.9%, very high there too, right? And then this is where I show you if I have a position in this. Again, I said I am long. I have a 173.314 shares. My cost basis is $13.90 per share. So I am obviously waiting for it to pull back below this. I am up on this position 15.56%. I have $2,408.39 into the position. It's currently worth $2,780.82, right? And down 1.2% on the day. Now, payout ratio is low, 61.4%, so that meets my criteria, but it shows a negative dividend growth. Well, what is going on there? As you can see, I went all the way back to 2018, and you can see the payouts are never quite 2 payouts in 18, 1 in 19, 2 in 2020, 3 in 2021, 3 in 2022, and 1 so far in 2023. So again, I expect them to pay out 2. Sometimes they do have a special dividend. You can see those large payouts, $8, and that would be a special dividend in my opinion, right? For the most part, there's one in 17 cents, another one $1.30, $1.41, $1.41, 99 cents, 83 cents, $2. So they are all over the place. It really is dependent on how well the precious metal sector and all the metals that they deal with, nickel, iron ore, that sort of thing. What are they priced at currently? And if you're looking for a steady Eddie dividend payer, this probably would not be one for you. But if you're looking for something in the mining sector, this is one that I think is starting to look attractive again. And I am interested to add once it gets below my cost basis of $13.90. And then if you can check it against, I think it even meets 4 of the 7 or 4 of the 6 or 7 criteria I showed you there in the beginning. So in my opinion, it would be a buy currently, even though my cost basis is a little lower, which is what I'm waiting for. So if you're looking for something in the mining sector, this one looks attractive at the moment, at least in my opinion. And that is really it for this video. Trying to find value in the market. I will have my portfolio update video coming out on Sunday, so tune back in for that. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, hit that subscribe button down below. Join me on this journey to financial freedom. Hopefully you're on your own journey as well. And if you have not started your journey to financial freedom and you do not have a brokerage account, there is a Webull link down below. If you use that link to open a brokerage account, put some money in that account and start your investing journey today. You'll get some free stocks. I'll get some free stocks. It is a way to help out the channel. Another way to do that, drop a comment down below and subscribe to the channel. That comment, let me know what you think of the video. Let me know if Vale is in your portfolio. Do you have other mining companies that you prefer? Drop it all down below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. Constructive criticism welcome as well, and I'll respond on the day of the video. So for some of you who are responding to older videos, I apologize. I do have a day job. I do have children that I like to spend time with, and my wife usually likes to spend time with me also. So this is a hobby for me for now. But hitting that subscribe button help me get to 1,000 subscribers. That's when you can monetize a YouTube channel. So help me get there by doing all that stuff. Thumbs up, notification, you know what to do down below. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and money. Should never invest any amount you're comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice of counsel of a certified financial advisor. We'll see you in the next one.